Many of you know, we launched our M&A Connects China initiative 24 months ago with the purpose of helping to facilitate more Chinese investment here in the United States at a time when we were just beginning to witness an increase in Chinese investment here in the United States. And I'm pleased to report, and I'm sure our host moderator today will expand on the subject. But we topped $14 billion in Chinese foreign direct investment here in the United States in 2013. That's up over just $6.2 billion in 2012, and we have great optimism about what lies ahead. But more importantly, I think I'm very pleased to welcome this distinguished panel here today, led by Selig, who is the co-chair of the global practice at Foley and Lardner, chair of the business practice group here in the New York office. What's most important, that reaches well beyond the statistics, is what's being done and why is it being done and how can you participate in it. I truly believe that it's in the best interests of our industry and the best interests of our country to encourage and be supportive of more foreign direct investment from China. I've had the pleasure of traveling with a couple of these individuals and Selig to Europe, to China, mainland, and Hong Kong as part of this crusade. I'm very pleased and very much looking forward to the conversation that will follow. Selig?
David, thank you. We're happy to put on this panel, and also it's our mandate to get us kind of back in sync so that lunch will be served on time. So this will be, rather rapid fire also in terms of the topics that we cover here today. We have a panel today of thought leaders, individuals from the realm of law, finance, entrepreneurship, from finance, from financial services, who really have been thinking through the issues of U.S. and China, both FDI into China and ODI into the United States itself. Lawrence Tian is really one of the pioneers of the financial system in China. He founded CIFCO in China, and his efforts on economic theory were accorded the China Economic Theory Innovation Award in 2001. A very high honor indeed. In fact, yesterday when we had the session on the BRICS, Patrick Zhong, who is the Senior Managing Director of Fergusson, mentioned Lawrence's work with the China Entrepreneur Association, where that China Entrepreneurs Forum really brings together the business and policy leaders of both countries in what has become a very robust and active dialogue itself. Alex Ho is a resident partner here in New York of the Jun He law firm, one of the great law firms in China, some 600 lawyers, 9 offices. Alex himself did his JD here in the United States at Northwestern University. He himself is an M&A, a capital markets expert. He was also a founder of the China Business Lawyers Association. And Alex is someone who I work with frequently, turn to often for his guidance and that of his colleagues as well. And then Melanie Chen is the managing director of UHY, the accounting firm and global network. You head the China operations as well. And that is very, I think, robust from from advising large global corporations for their investment policy in China, to working with Chinese companies who are public in the United States in terms of their compliance and other requirements as well. Your work goes beyond accounting. It goes to the point of business advisory and helping companies position themselves correctly. You bring to the table also not only an accounting background, but a law degree from what I describe as at other university, from Harvard. And so it's a pleasure to have you on the panel as well. Qing Hong is the Deputy General Manager of ICBC in New York. The Industrial and Commercial Bank of China is the largest bank by asset size in the world. It is one of the 4 great banks in China. You were the bank's Chief Risk Officer and now promoted to your current position as Deputy General Manager. I want to go back to some remarks by the Brazilian ambassador to the United Nations, Ambassador Antonio Patriota, yesterday, where he talked about the role of the BRIC financial institutions in dealing with the financial meltdown in 2008 and how crucial they were in terms of providing liquidity to the global and U.S. financial markets. Right at the top of that list was ICBC and the role that it played. And it was a great honor for ICBC to be the first bank from China to acquire a U.S. bank, Bank of East Asia. And in fact, it was Raj Cohen and his group that actually represented you, I think, in that transaction itself. So let me set the table a little bit for our discussion here today. The bad news is, I guess, is that China is facing its worst economic slowdown since the 1990s. The good news is, even with that slowdown, and JP Morgan thinks that the GDP growth this year will be 7.2%, Bank of Communication, CICC, 7.3%, but it is still a very robust number itself. Jim O'Neill was referenced in various other discussions about coining the phrase BRICS. In a recent article that he wrote at Goldman Sachs, he said, even at a 7% growth, it provides $1 trillion in global GDP a year. So China clearly is a powerful engine, but things have changed within China itself. In a recent, last week, report by JP Morgan, when they reconfirmed their 7.2 growth target for China for the year, they did, however, say that the external demand recovery will not be significant, that the pace will still be very slow, and that, I think very importantly for our discussion as well, that the developed countries will overtake the emerging markets as major contributors to the next phase of global growth. So I know when Mario spoke earlier today, he was talking about a 20-year horizon, but there are some statistics from the conversation yesterday that Patrick Zhong has spoken about, which are really quite impressive. The income growth for China from 2005 to date is from $2,500 per person to $6,500. Internet users have gone from 100 million to 600 million over that 8-year period, including 450 million mobile devices. English proficiency of the population from 10% to 30%. There's a whole now network of high-speed rail that was never there 8 years ago. Consumer spending is estimated to go up 10% per year. So as we look at China today, what are the sectors that seem to be of interest to investors? And really, how have those sectors changed, and how have some of the factors in China changed from a panel, for example, that we might have had 3-4 years ago on this very topic? Lawrence, why don't we begin with you and your thought as to sectors of interest, of opportunity as you see it here today?
I think that right now the China economy continue to grow and 7% more. The major sector attract more attention is health industry. The China government just made the ambitious plan to increase the healthcare expense from 2 trillion to 8 trillion up to 2020. So now it's a very hot area. It's the healthcare area in China, and China government also made the new policy to open the hospital for the private sector. Before, 90%, I think 95% of the hospitals established by the China government, whether it's a local government or central government. But since this year, China government made policy and allow the, all kind of the investment get into this area, and we see a lot of the acquisition, for the hospital, and they're good opportunity for the whole healthcare chain, whether senior living and the hospital or healthcare management. So all of those areas right now because very hot, especially, and we can think about, China is is a big country with 1.3 billion people. In next 10 years, maybe 20 years, and the old, the adult, the age over 60 will occupy more portion of the population. So that will provide a great opportunity. I think this is one of the hot areas.
In fact, there was a recently announced deal, I think about 3 weeks ago, a month ago, where Shindex, the international United Family Healthcare, was acquired by TPG and Fosun. And that is a hospital and clinic network which has the ability to expand over multiple cities. But I think this is a paradigm of what is going to happen more and more. And we know, for example, with Taikong Insurance as well, they're building a 3,000-bed senior living facility, one in Shanghai, one in Beijing. And a typical facility in the United States might be maybe 300 beds. So the magnitude of the opportunity in China for the expansion in the healthcare area is enormous. Melanie, healthcare is one area. What are some other sectors that you're seeing?
I think that China is at the point of transition from a low labor cost manufacturing-based market into a self-consumption sustained economy. And so the opportunities reside in the areas that, finding the unfulfilled consumption demand. And I have seen that, I totally agree with Lawrence that in China, everything related to quality of life will present great opportunities. Quality of air, quality of environment, quality of health, quality of food, and education. I give you an example that every time I travel to China, I always carry two huge suitcases, and one suitcase will fill with vitamin supplements from GNC and vitamin shops and Costco's, and those are presents I give to friends. And my husband always wonder, are your friends all sick? I said, no, they are healthy and well, but they have higher trust and confidence in products made in the US, especially when it's health related, but they don't have great confidence and trust in the products made in China. For example, the Centrum that you can buy in China, but they still want to buy in the US. And one of my clients that is a New Jersey-based vitamin manufacturer that was acquired by a group of Chinese individuals in 2010. And it grew its sales from 90 million to 300 million in 3 years. And now their plan is to sell US-made products back to China. And we have another client that is in the helicopter industry that was acquired by a Chinese company in 2012. And in 1 year, production is doubled because 50% of the growth is coming from China, the orders from China. So high-end consumption is another area that will present great opportunities for US companies.
So we're talking about consumer products, you're talking about green technology, aeronautics as well. China has lifted the ceiling, so up to 10,000 feet for the private jet and the commuter jet market itself. In fact, while it wasn't a transaction that went forward, but in the Hawker Beechcraft transaction itself, when Perella Weinberg was pre-qualifying different buyers, 12 of the 15 buyers happened to have been potential buyers, Chinese entities, themselves. Alex, what do you see in terms of sectors?
Sure. Well, first of all, it's good to be here again. I see many old and new friends, and also it's a little bit bad that I'm hiding here, so half the audience couldn't see me, but maybe it's better that way.
Come stand here.
We can hear me, right?
Oh, very well.
That's all right. Let's take just a quick minute to look at this new mini stimulus plan that this new government is putting out. We're talking about just this is several weeks old. Now, there's three major components to this mini stimulus plan. Three different industries or three different aspects. One is the construction of more affordable housing in different cities to sort of move millions of people out of the urban slums, so to speak, into affordable housing. So that's part of the urbanization trend that the government is encouraging. and also to sort of encourage more investment in that particular field to boost the economy. And the second component of the mini stimulus plan is to construct railway projects, especially in the western parts of China, and also to better connect these traditionally less connected parts of the country with each other, with the east, with the central parts of the country, sort of to boost investment again, but also to better people's lives, as is the case with the construction of affordable housing. And the third prong of the plan is to reduce the taxation generally on small and medium-sized enterprises. So I think this has to do with Selig's question, because if you look at for example, the railway and the affordable housing, I got asked that question earlier today. These are investment projects. Is this going to create even more bad debts? Subsequent to the 2008, 2009, huge stimulus plan in China at that time, which created a lot of problems. I think there are similarities there in the sense that these are investment projects, but also I think the similarities end there, because if you look at these projects more closely, the affordable housing, end up, actually directly benefits people's lives, and also the railway, by creating more transport connections, it also creates more, better people's lives, and most importantly, create consumption. So I think these areas are very important to look at as investors, as professionals. Just very quickly, just to echo Lawrence's comment and Melanie's, anything that has to do with the aging population, the healthcare, the senior housing, which is kind of a real estate / healthcare combination project, and also anything that has to do with urbanization in general, anything that has to do with new energy, I think has a lot of potential for foreign investors.
As Mario has said earlier today, I think the current estimate is 2023 when China GDP will overtake the US GDP. But there's also that question of quality of GDP itself. And we should keep in mind in terms of the expanding middle class that on a per capita basis, China today is 81 in the world, on a par with Namibia and the Dominican Republic at $6,091. Compare that and contrast that with the per capita in the United States of approximately $51,000. There's a huge opportunity here as well. Qing, let's talk about financial services. I mean, one of the things I think that is a truism in China is that there's a disproportionate amount of assets that are concentrated in real estate. And part of that is because that there isn't other financial product and financial services where people can comfortably and credibly invest. Where do you see the financial services industry heading in China, and what is a time frame do you see for it being implemented?
Okay. First, I would say, just to add one more comment about the investment into China is more welcome if it's a greenfield. It can create more jobs. That's also a concern that Chinese are concerned about.
Yes.
So that education, healthcare, not just the M&A, but you need to do the greenfield. Let's get back to the real estate. Real estate markets, I know people are worrying about the real estate market in China, but the things, it's really not that bad, just because two things I guess we need to keep in mind. That's when I was asked about these questions, my understanding that is foreigners don't really understand China market or policy makers. It's these two things. First, Chinese financial statement, the financial institutions, all the assets on the big banks, they don't really mark to market. So if there is real anything, that would take long times. So it won't be a hard landing, just a soft landing, I guess. Back to the real estate, there is a new generation, and now Chinese government just lose the policy of one kid. That could be help. And the real estate in China now would be boosted by the urbanization. So there would be more and more opportunities. I would just keep it short. That's good opportunity.
And I think also the Shanghai Free Trade Zone is really an experiment allowing the aggregation of capital. So you, Livono and others, you can really redeploy your capital within China through entities that are situated there. And what I've been reading, for example, to create a mutual fund industry, to be able to have municipal debt rated itself, probably is going to take a full, 2-year period at least to be able to create the infrastructure, to be able to have the credit agencies as well as the financial services product in place to do this. But it seems to me that part of the reason for the Shanghai Free Trade Zone is to have this ability to experiment and to build a system of financial products for investment vehicles within China itself. Alex, would you agree with that?
Absolutely. I think we are keeping close watch on the Shanghai Free Trade Zone. Matter of fact, we have some colleagues in our Shanghai office who put out briefings on a very regular basis. I think it remains to be seen what exact impact that's going to have on foreign investments into China. In general, there's been some high expectation about financial investments, the funds, hedge funds, private equity funds going into China by going into the FTZ and then get much easier access to China proper. Honestly, at this point, that has not materialized to a large extent. So another example with the FTZ sort of not living up to the hype is the fact that if you look at the negative list, the negative list is supposed to be the contrary to the industry catalog, because as you may know, in China, if you invest in a certain industry, you have to look at the catalog to see whether it's permitted, whether it's encouraged, whether it's allowed or prohibited. The negative list is trying to do the reverse. Basically, anything that's listed on the negative list, you cannot do. Everything else, you're free to go ahead and do. The problem is the negative list itself has more than 1,000 items. So it confused a lot of people, and a lot of people compare that with the industry catalog. They feel like they're more than 90% identical. So it's just a different way of saying the same thing. You cannot do all these different things. So I think it remains to be seen the exact impact, but I think the trend is clear. The Chinese government is trying to create a more favorable, even more favorable investment environment for foreign investors, and we cannot live without continued foreign investment and enthusiasm in China.
I want to segue to the United States, but just one comment, because I think on the last panel, shadow banking was mentioned. It is an issue, but to put it in perspective, shadow banking in China, at least from some of the statistics I've seen in 2012, was 10% of GDP, as opposed to 150% here in the United States. But shadow banking is an issue that China is going to have to deal with and regulate and bring into the financial services sector in a meaningful way. Let's turn to ODI, which is investment from China throughout the world in non-financial assets. David Fergusson mentioned there was $14.6 billion invested in the United States last year. That was, it compares that, it was $14.6 billion of $90.17 billion globally. China invested in 156 countries or regions in 5,090 enterprises. What is key, I think, about the United States is that you will see the continuing presence and participation of the Sinopecs, the CNOOCs of this world in the energy and other sectors. I think the story really here is the private companies and their emergence as a dominant force in investment in the United States. The largest deal done last year was a private deal in the United States, was Smithfield. The year before that, it was Wanda's acquisition of the AMC theater chain. To put it in perspective, I think it was 76% of the investment into the United States last year in non-financial assets were from privately held companies. And I think we're going to see that in real estate sector, as you've seen with Fosun and other investors here. I think you're going to see it in healthcare. You'll find it in other ways as well. Lawrence, what do you see as some of the most attractive areas for acquisition into the United States as well by China-based companies?
Well, I think 5 years ago, and you will see more merger acquisition come from the state-owned company or big size from the, focus on the oil gas, the resource. But most recently, and I think most, much of the money come from the private sector and focus on the real estate project, such as Fergusson, acquired Chase Manhattan Building, and it's one of them. And also the other company come from Shanghai called Greenland Company will build the large, residential house in Berkeley. So those things never happened before. So this is the first time. But I can clearly see that, and there are more, investment that come from the private sector to diversify different area, different industry, include the solar farm and biotech and auto parts, and even for the shale gas. So I think that diversify will be the new trend, and most of the investment will come from the private sector, not the state-owned company.
And you're going to see an expansion of the investment in the auto sector as well. I think last year in the state of Michigan alone, $986 million were invested. 95% of that was in the automotive sector. In real estate, you have the wharfs in Oakland, California as well, Detroit as well. Chinese entrepreneurs making a major commitment to the revitalization of that community. Chen, if I understand correctly, ICBC is lending not only to SOEs, but to SMEs and even to companies that they don't necessarily have a banking relationship with in China, but are considering them in terms of their financing for their investments here in the United States.
Sure. That's one of the major reasons why ICBC got to open a branch here to support those Chinese backgrounds, what we say, to going abroad, to acquire or investment. We actually we are a small branch relatively compared to our group. Our branch is just like our asset is just 10 billion, but last year we do like 3 billion to those Chinese background companies. They need money to invest, not only the state-owned companies, but SMEs. And we will facilitate those deals, use their credit lines probably back in China and relationship with ICBC already. Or if they acquire like a building here, we can do commercial real estate.
Excellent. And Melanie, what are some of the challenges that you are finding? Are some of the cultural differences being narrowed? Is there a better understanding that you're seeing of Chinese companies understanding the rules, whether it's in a bankruptcy process or in a controlled bidding situation as well?
Yeah, there are many challenges. I would like just to give you 2 examples about from tax perspective, since that's my expertise. I have seen many Chinese companies that make very typical 2 mistakes in their investment structure. One is that many companies like to set up intermediate holding company in jurisdictions like Hong Kong, BVI, and Cayman Islands without consulting with any professional advisors, and because they just follow their peers, and that's where they set up their holding companies. And in turn, those holding companies set up operations subsidiaries in the U.S. U.S. does not have tax treaties with those tax haven jurisdictions, so dividends, royalty, interest, and service fees paid to those entities in those tax haven jurisdictions will be subject to 30% withholding tax, which could be reduced to 10% or 5% if Chinese companies have set up the structure properly in a jurisdiction that have a good tax treaty with U.S. Another area is that many tax planning techniques that work really well for U.S. shareholders. could become nightmare for Chinese investors. For example, typically you set up a LLC in the US, and by default, you will treat it as a partnership or as corporation. But if a Chinese company that's set up in Hong Kong, in turn set up LLC in the US without filing, election to treat it as a C corporation, will be by default treated as a branch. The consequence is that the branch will be subject to tax at the corporate level as a corporation at 35%, and then the earnings will be subject to 30% withholding tax, regardless whether it's been distributed or not. So that results to double taxation disaster. And those all can be remediated if those Chinese companies, they make proper planning before they close the deal or before they set up operations. Of course, there's ways to correct those structures, but it comes with a cost after everything has been set up. And also, I like to promote ICBCs a little bit, because two of my clients, one is in the vitamin supplements industry, one is in the helicopter aviation industry. They all actually received the loan from ICBC through the guarantee provided by their sister companies and the parent companies. I think the success for Chinese companies run their US operations, one is people, you need to have good management, another is working capital. And those, Bank of China and ICBC provide really very strong funding support.
Well, Melanie, thank you. I think what you've said is really the flip side of what Andy Rice was talking about. In terms of investing in China, it's the same in the United States. Involve your experts, your team early, so that all issues of structure, due diligence can be addressed. Alex, I think the final word with you on capital markets. With your relationship with Alibaba, how do you see the capital markets here in the United States? And do you see a role for those capital markets, the public markets, other than in the TMT space itself?
Well, I think the general stock market is recovering both here and for Chinese companies' prospects of getting listed here. As you guys all know, for the past few years, there's been this freezing of Chinese companies coming here, and for many of them who were here, they got delisted or they got sued and were involved in some of these representing one side or the other. It was an unfortunate phenomenon over the past few years, but I think, if you look at the Chinese companies in general, there are many good companies. For each bad company, there's probably 10 very good investment opportunities. So I think we're getting to see more and more Chinese companies coming here to get listed. And I think after the fiasco of the past few years, I think people are starting to realize that if we all do more due diligence work as investors, as professionals, we're going to weed out the bad ones. We're going to keep the good ones, and there's going to be a lot of opportunities for investors.
Well, thank you. I feel like this is a bit of speed dating, but I want to thank you, Qing, Melanie, Lawrence, Alex, for your comments and your thoughts today. And thank you very much for the audience. Thank you so much.